Hello guys and gals, this is Derek. It is the 11th of January 2010 and this will be an economic video. I will start with unemployment. If you have been following many different vloggers or economic news, you would know that the unemployment rate stayed at 10%. And the U6 number went from 17.2 to 17.3. This was December when we had Christmas. Normally you would think that there would be an increase in jobs. Maybe the unemployment rate should go down from 10 to 9.8 or 9.7%. That did happen. You even talk about the amount of jobs were lost. A lot of people are talking about how these are phony numbers. And when you look at their unemployment rate at 10%, that is a phony number also when you don't count disgruntled workers. One can say an example like, well, on planet Earth, as far as surface is concerned, are you going to get majority land or are you going to get majority ocean or water? And the answer to that would be majority land, because I really can't count the Pacific Ocean. It's just not worth it for me to count. Therefore, I will make it official not to count the Pacific Ocean within the Earth's surface, making it so there's more land than there is water. Of course, that's a ludicrous statement to make, and it's stupid to make that official, but wouldn't it be stupid to make our U3 numbers official? I think it's a pretty obvious answer. However, this morning on CNBC at 10:10 a.m. Eastern Time, host Mark Haynes and Aaron Burnett were talking about the disgruntled workers and part-time people looking for full-time work. And it's getting on there. And I think a lot of it has to do with the consciousness of the Mayan calendar, where we have truth and ethics coming in. Thus, the next 2 years, expect a heavy dose of truth and ethics within consciousness. And there's no real job growth moving in. A lot of the real jobs that are coming in, like government, I think there's census jobs, a lot of different government jobs, and Walmart, I don't know if they're hiring anymore, but even if those type of jobs like Walmart are coming in, they're like $10, $11 an hour jobs. And do they even pay people who stock shelves and are cashiers $10 or $11? If anyone knows, please let me know, because I don't think it would. And those are the type of jobs that you give to 16 and 17-year-olds who are starting to get in the workforce for the first time. And now we have college guys who are going in the workforce getting jobs at Home Depot. When that's the case, you know there's something wrong with the world. And of course, there definitely is. Inflation, of course, a huge key. I've been talking a lot of that based on the supply of money and the printing of money. We printed a lot of money, not only in the last 2 years, but the last 10 years and the last 100 years since the Federal Reserve has come in. That's why you used to be able to buy a hamburger and fries for under 25, 50 cents. Now they're more expensive and food's a lot higher. Although what you'll see now is Taco Bell selling their burritos for 90 cents, Burger King selling double cheeseburgers for $1, Jack in the Box selling combos for $3.50. It's a little easier for the big chains to be able to do this, as the power in numbers. When you get that big, you're able to wipe out the competition, sort of like what Walmart is doing. And the big thing is, if you buy the burritos at Taco Bell for 90 cents, that might be cheaper than eating at a grocery store. It may not be healthier, but it might be cheaper. Whether they make money if they were to sell that over and over, I really am not too sure. But nonetheless, it's going to be difficult for a lot of restaurants to be able to compete with it, because when money is tight, that means you can't eat out as often. And these plates where you used to get meals for anywhere to $10 a plate and higher, those type of restaurants are going to have difficult times, as people are not able to eat out quite as often. I'm going to now be talking about investing in the long term, because you're going to hear the mainstream media talking a lot about how get your money in for the long term time frame. That's what you're supposed to do. And if you were to buy bonds back in the 1970s, 80s, 90s, or stocks, then mathematically you could be making great plays. I remember as a teenager having a bunch of bonds that did well, gaining 9% in a single year. That would beat inflation at that point. You can't do that anymore. And the financial system was more secure back then. Boy, have times changed. Now if you want to be investing, I don't see stuff like bonds and stocks to be the smarter idea. And that's why I talk a lot about investing in gold and silver and food and real assets that are tangible that you can use. And this chart here is the S&P 500 over this previous decade. 4 of those years were losing years and 6 were winning years, but it lost almost 25% for the decade. Then if you throw in inflation, it would even be worse than the 25% that it ended up losing. But they're still going to tell you invest in stocks, invest in stocks. You won't hear them say too much about investing in gold. And this is the gold chart for that same period of time, which the last 9 years were positive years at a 280% gain over that period of time, which means you did a little bit better than beat inflation over that time because of how much gold was taken down over previous decades like the 1990s. But even then, because inflation soared so much over the last decade, that's why gold and silver and oil and so many other commodities managed to do very well. And the S&P 500 did not perform very well. And the mainstream media is going to tell you to invest in that. So to me, this is obvious that they are either not smart or they are not loving and caring. Meaning, they are not smart because they were telling you to invest in stocks and not gold. They may have cared for you or loved for you, but because of how dumb they were, they told you to be buying stocks. Maybe they're smart, but they're not all that caring and loving. Therefore, when that's the case, they're going to outright lie to you, tell you to invest money the way they want you to because of their agenda, which is what they would do if they didn't give a crap about you guys. And when you're looking for advice from people, you want to look for people who are smart within the subject and actually care about the people, because those are the 2 key factors there. Because if you only have one over the other, you're really going to be losing out. And they may say, oh, buy gold, stocks, maybe GLD or Barrick Gold. And even if you're buying it, you might win, you might lose. I guess that all depends on when you get your money for that after you sell. There's going to be a lot of problems, I think, when the financial system falls down. We talk about stuff like bank holidays, what the net result is going to be when more and more people are finding this stuff out. And they are. To me, I think the easiest answer is that it's going to be pretty something else when you got so many people rushing in to get money. 20% more this week, then another 5% more, then another 15% more. When that happens, 10% more getting money one week and so on, that means major changes have to happen. And they'll even tell you when you buy the real gold that they want you to store it in the safety deposit boxes. I guess if you trust them more than you trust yourself, maybe that's a better thing to do. But if you feel more safe to put your gold and your silver or your assets and protect them yourself, then that's a better thing to do. This way, if you need it whenever, you got it, especially on a Saturday if you need it. And of course, with the bank holiday, you can't get your stuff out of your safety deposit box at that point. As far as the short-term level of gold, I was talking recently about a level of support I was expecting at 1100. Bingo, bango, that was correct. We had a nice surge today in gold overnight last night on the Asian markets, a move that got us above the 50% retracement level. On the overnight market, it came back to that level, it found support, and has stayed higher. I think we will find a level of Fibonacci resistance at around 1171, and if we have a comeback Fibonacci